Hello traders and welcome to another video review. Today is Friday, the 29th of the January 2021. Let's take a look at the Forex calendar to see what is going on the financial markets, and then of course we will do the appropriate technical analysis. So we will swipe down towards Friday. We got a bunch of data published already from Japan. As you can see, most of this data were better than expected. Even the unemployment rate is lower than forecast, 3%. The actual reading 2.9%, which is even better. Only the industry production data were worse than expected, as the gap widens between the forecast minus 1.4 and the actual reading minus 1.6. But we will take a look at the Japanese yen for sure. We got some data here as well at 6 o'clock were released. Consumer confidence better than expected, and the housing starts a little bit lower than expected in Japan. GDP from France, kind of important because it's better than expected, minus 1.3% for the fourth quarter versus the forecast of minus 4%. So it's definitely better result than expected, and it's still worse than 18.5% for the third quarter. So the difference minus 1.3 and 18% is definitely something worse for the French economy. There are still import price index and retail sales data from Germany that are scheduled for release at 8 o'clock, and the unemployment rate and employment change from Germany are scheduled for release 5 to 10. We got the retail sales and core economic barometer data scheduled for release 8:30 and 9 o'clock respectively. Some data from Spain, as you can see. We got at 10 o'clock GDP from Germany. So bunch of data from Germany and from the rest of the Eurozone countries, as you can see. So maybe the euro dollar will be under the influence of this data. We will see. During the New York session, we have even more data to scheduled for release. We have data from Canada, gross domestic product, 2:30, and industrial product price index and raw materials price index. All data are from Canada, as you can see. The expectations for the gross domestic product are 0.4%. So they're exactly like there was a month before. From the United States, we got data in form of a PCE core, personal spending, personal income, employment cost index, Chicago purchasing managers index as well, and pending home sales, together with Michigan consumer sentiment index and University of Michigan inflation expectations. For all of you who trade the crude oil, there's bucket huge US rig count scheduled for release at 7 o'clock. So bunch of data from the American economy, half past 2 and around 4 o'clock. So it's worth to keep an eye on this market as well. So I think we should take a look at the US dollar to Swiss franc as well, and of course US dollar to Canadian dollar. So it looks like today's analysis will be all about the US dollar. Let's take a look at the US dollar to the Japanese yen first. We have a breakout. We have a breakout above 104.41, which means we are now trading above this trend line here, which is the long-term trend line. If you can see it here, there you go. I will just zoom out. This is the long-term trend line, and we have a breakout. Nice, very nice for the US dollar bulls. So let's take a look at this situation. We are heading towards 104.78. This is the next target for us. As you can see, I have it marked with the blue arrow. And if we are if we will be trading above this level, of course, 104.41 will be the technical support now. For now, it's only the intraday support. But if we break above 104.78, the next target is 105.76. So it's almost 100 pips higher. And the question is whether this breakout is kind of only A, B, and C correction to the upside, which which means that if we just apply the Fibonacci expansion, which means that 100% is at 105.12. So that will be market geometry. We can even make it a horizontal line to notice that. That might be the target for the ABC correction. If we break above 105.12, then we know that most likely there is something different going on the US dollar to the Japanese yen, and the next target is 105.76. Okay, US dollar to the Swiss franc. What do we have here? We are still trading below this technical resistance. So I think we should change this line for more static line for us, because it's very, very important for markets. Yeah, the level of 8,919 is very, very important for markets. As you can see, partially our plan has been continued and was apparently fulfilled, but we are still inside of this trading range between 8,919 and 8,825. This is our trading range. If this level is violated, the next target is 8,998, which is basically a level of 9,000 pips. And if this level is hit, as you can see, we got the long-term trend line here as well. So it might be some sort of a pressure for the bulls, and I expect some kind of a reaction from market participants at this level. So please keep an eye on a breakout above 8,919 and at the level of 8,998 on the US dollar to the Swiss franc. Japanese yen, Swiss franc, and we should take a look at the USD Canadian dollar. Another breakout of the American dollar. We are above this trend line here. Nice breakout candle. We are above 1.2798, 1.2835. The local high was made at 1.2881. So we are getting closer to this two levels. Let me just put the blue arrow here so there is no mistake. Oh, there you go. 1.2928. That's the first target, maybe even for today. And of course, the high from the 21st of the December last year, 1.2996, basically. So we will see whether this will be some sort of ABC correction, as it was in the case of Japanese yen, or maybe that will be some sort of a more stable uptrend reversal, and downtrend reversal, and maybe the uptrend will be now continued for a longer period of time. So please keep an eye on 1.2928. This is now the target level, and 1.2835 and 1.2798 are right now the technical supports for the market. Let's just take a look at the US dollar index to see what is going on. Why all of the markets with the US dollar are bouncing and breaking above the trend lines or some sort of the important technical resistances. As you can see, there is still valid ABC scenario on the US dollar index on the daily time frame chart, which means the next target for the US dollar is 91.1. And if we get there, then maybe we will hit one of this Fibonacci retracement or one of these two technical resistance levels, 91.72 and 92.44. For now, however, we are still trading below the highs of the 18th of the January 2021, which is the top for the wave A. We are still below it. Nevertheless, the wave B looks completed, and now we should resume the rally higher, and we are just basically waiting for the nice green up candle breaking above 91.1 and staying there, which means it has to close above this level as well. and then we can say that the next target is one of this Fibonacci retracement, for example. So very important to keep an eye on the US dollar index. Maybe this is the reason why the rest of the dollar pairs are rising basically, or are breaking above the important levels or important trend lines, at least on the daily time frame chart ahead of the data. Please notice that we have a kind of a busy day today, so there might be another trigger for the US dollar to go even higher than it is right now. And the second thing I would like you to point out is to pay attention to the US indices. S&P 500, Dow Jones, Nasdaq are the three most important ones. If they are going lower than they were in the recent days, then of course the market flow, the capital flow will go to the different markets, like for example US dollar. So from the stocks, the market will flow to the US dollar, and maybe that will help to buy the US dollar and help to rise the US dollar's price even higher towards one of these levels. So it looks that's everything for me for today, for the Friday. Thank you very much for watching this analysis, and I hope I see you guys on Monday morning. Take care and bye bye.